Good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening, as we're here now on Thursday, the 18th of September, 2025, and the time getting on to 6:50 p.m. Central Time. You know, it's getting darker outside earlier. I hate it. So we've left the summer. For me, we're in the fall months. I told you, I don't work off the calendar per se. I look at how the sun's going down and things changing. I had to go out already and change the clocks outside when they come on. So for the yards and so on, a whole real change taking place. I think you're seeing it. What hasn't changed is the bull market in stocks. It just keeps going. It's the never-ending bull market. You've stalled out in the metal markets. If you take a look at my metal report, you'll see what I'm saying. The dollar has reversed course. It's not in an uptrend. It's a bear market rally, in my opinion. No real change there. Energy markets are caught in the middle of no man's land. Europe wants to hit with more sanctions. The president is telling Europe to stop buying the oil, that he won't join in and do crazy things unless they can get their community together. That, I think, is the right word. And stopping feeding the engine of the war machine. In other words, Europe, they still have countries, and there's a number of them, that are buying natural gas. And they have some members of the EU that are even buying oil. So until they can get their house together, what do you do? And the president is frustrated. He said, you know, he believes that he's come around what I've been saying. The fiddler, remember what I said? Because he was dancing to the tunes of Putin. Those days are over at this point, to a degree. And Putin is pushing and pushing and pushing at this point, trying to get as much as he can. I think he realizes that the door is closing and he's got to finish up this war as fast as he can because the economic tide will turn against it. I don't know if you're reading the news, but within Russia now, they're going after more and more companies. There's a major confectionery company, a true billionaire, an oligarch. The man owns I believe, one of the major soccer football teams in Australia as well. And they're trying to take that. But they've done this to different people. As the state needs money, and why split it with somebody? So they find reasons to go after it. That's a sign of what's going on there that we in the West hear. Do I know all the facts? No. Do I believe there's a propaganda? A lot of it, absolutely. Western propaganda. So I don't know all the facts, but I know economics. And economics, you start taking the companies away, there's a reason. And this is inevitably what dictators do. And that's basically what I think of Putin as, a dictator in the country. And they need the money. They find a way to get it. That's simple. All right. Bonds and notes. Interest rates have been going up, not down, for the past 48 hours. Are you paying attention? Remember, I told you the 10-year note briefly, and if you weren't looking in that 1 minute, I think I said that yesterday, it got under 4%, it popped right back up on you. Okay, it's not going that far, but it's done its thing. You wouldn't know that in the stock market. The stock market has blinders on. The blinders are, if you don't buy me now, you're going to miss out. There will be corrections, but this market is so strong, I think you wipe out the idea that you're going to get 10% corrections. I'm not expecting it. Why? This is the weakest time of the year for the stock market, and it's not breaking. We saw that happen in August, another month that's traditionally bad. When you're contra-seasonal, the moves are bigger. That's how I look at it. And the fundamentals are right. Lower interest rates, corporations making money, consumer that has still got money in their pocket. These are all the right things. The thing that can hurt the market is the labor market gets too weak and you lose the consumer, and then you hear people are starting to fire people. You don't want to see that happening. The Fed is making the move ahead of time, and I think they will avoid that. That's why people that talk recession, I'm not quite buying into it. The Fed's already into the rate cutting cycle. When we take a look at how you're doing, you're still bullish in the market. You've got the pattern of higher lows. You've got the higher highs on the swing line. And that's what this brown line does. It connects, if you will, the dots from the day before or the period before. It depends what kind of chart. It could be a 5-minute chart, a 1 minute, a 15, a 1 hour. It doesn't matter. The rules are the same, and the indicator I created will do this. If you're in TradingView and you want to use this, go to our website, iraepstein.com, and in Customer Resources, sign up to use our suite for that, and we turn it on for you the next day. Higher lows, higher highs, the way you go. And by the way, at Linn Associates, the charting services we have, this is in it, included, and in our QT charts, it's there as well. So I put everything in there for the firm I'm with, and I work with TradingView as well. So this is a pretty neat service. I love this charting service a lot. In the S&P, higher lows, higher highs, bullish. You're over the key 18-day average, which is over the 100, over the 200. So where's the resistance? The logical resistance is the Bollinger Band. And notice you hit it and you sort of run out of momentum. It doesn't mean you can't go higher, but you're not spiking over it and running away. That is just a classic bull market. It gives you these brief opportunities to come in. There's a key moving average that you can buy off of that under a certain circumstance, which I teach in what's called my Enhanced Bollinger Band course. You have the Enhanced Bollinger Band at work. You've got the stochastic embedded. You keep hitting that number. Therefore, on breaks, I still think the community, the trading community, is buying the market. When the red line closes under 79, the game changed. It did that already in the silver market. So you want to take a look at some charts and get a feel for it. In the Dow, you weren't embedded. Now, let's take a look where you're at. Let's go back to Thursday. Today, both numbers were not over 80. They are tonight. So you have an overbought market that's trying to go to the first stage of embedding against the upper Bollinger Band that's in a somewhat sideways action. It's bullish, but what are the odds of staying over the black line? 5% of the time. It doesn't mean the market can't push the up on the market and move the line higher, but it's not doing that so far. Therefore, as I look at it, there's got to be better places to deploy money. In the Russell, the market laid a bear trap today. Let me show you the trap. I want to come back one more day. All right, here's Tuesday's close. You're still with an embedded reading. All the numbers are over 80, and they've been running that. You lost it yesterday. The only time you can get it back is the day after you lose it. Otherwise, it's got to rebuild it the way that I teach. You got it back today. So the logical thing is the market goes up and makes a new high when that happens, and you're setting new contract highs. I mean, it's exactly what I teach in the course. Get a feel for it. It doesn't matter if it's stock indices, an individual stock. The idea here is that this happens over and over. I wish I could tell you it happens every single time. Nothing I know except tax and death is every single time. Everything else, it's a probability. Is it a strong probability? I think super strong. I use that word for a reason. But there's always a risk with it, and I teach you how to play with the risk with it. But in this case, you're over the Bollinger Band. You're only, in my opinion, in fact, I know this from the algorithm. The algorithm will adjust to the market, and you're only going to be over it over a big pool of numbers, 5% of the time. Therefore, strength for sure. Bearish, absolutely not. Clean trend? Absolutely not. New contract highs? Absolutely. Did it catch the shorts? Yes. Did it catch the people that bailed out and want to buy back in? They don't know how to come back in now. Okay, that happens. In the DAX, every day I've been telling you, I think the market's fighting a battle between the 100-day average and the 18. And if you can get over the 44.50 area, that might catch the shorts at this point. Guess what the high was today? Went right there. So tomorrow you could be changing what the trend of the market is. In the 10-year note, let's go back here because we were talking together about this. And this is, again, the lost embedded reading. Take a look. Fully embedded. If you lose this reading, I believe price and the 18-day average will come together before you go up for the higher high. Market comes down, and that's exactly what you did today. And this is where you're at. Does that mean I'm bearish? Well, for the moment, yeah. Lower highs, lower lows if you close under the 18-day average. You didn't do it on the close of business on Thursday. This is Friday's trade already. You did the same thing from back here. So do you get a warning sign on momentum? Yes. Why? Because momentum often, very often leads price, not price leading momentum. When you get price leading momentum, it typically comes off an event that came out of left field. The market wasn't ready for something. It could be a piece of terrible news. It could be a world event. Whatever that is, then the market moves up or down dramatically, and it changes that momentum play. But in a normal market, from my decades of doing this, momentum will lead price, and I pay attention to what's going on. And I'm always looking for major reports. You'll hear me say here how often, don't go through major reports. You can get burned on them. It could be just like here. Hey, you're looking for a reason because the Fed's done what everybody thought. It cut the rate. Well, why is the 2-year note rallying? That's the one that the Fed controls. And instead, it didn't. Always be ready for that. In the dollar index, I fully believe you're going to hit the 18-day average. You neutralized yourself. You got under the Bollinger Band. You stayed there all of 24 hours. You went down today. You came right back on the close. I think you'll get up here. And I don't think that you've really changed the bearish bias in the market. It's still alive. You're still under the 18-day average of closes. And in the euro, when you got over this, you heard me say it to you this week. I said it the past 2 days. I don't believe you should buy over a Bollinger Band, and I pointed it out. You can generally do better. So if you're looking to buy this market, which is still in a bullish trend, I think the market's more interesting at the 117.90 level. And that's where I think the pros are going to take a look. Will they buy it? I don't think the pros put out buy orders when you have one of the numbers still overbought. And any reading from my definition of overbought, any reading over 70 is overbought. So we'll see what the market does there, but it's got to be under the 70 reading for that to occur. In the British pound, the two markets I happen to have liked the best were the pound and the Mexican peso. Now the pound, we saw the Brits held interest rates, all right? They didn't do much of anything right here. Market fell back. It's still in an uptrend. Just like I just showed you, you're still overbought. As long as one of the numbers is over 70, I wait. I wait for the setups that I want to see, and they come. That doesn't mean they're going to win. They come, and then I can control the risk under my parameters. And you can run into streaks. Traders do where everything they do is, wow, how could I be this wrong? And all of a sudden, you catch a gold, you catch a silver, you catch a Russell, you catch a Dow, an S&P. That's what happens in life. That's the life of traders. And I'm not talking in and out trading. I'm talking, you don't know if a trade's good or bad until the end. And once it gets going, you try to stay with it. All right, give you an example. If you're a NVIDIA trader, I put my clients in late in December of 2023. They're still in. You heard me. It's not that I knew anything. It's how the chart evolved. I knew nothing. I want to make that ultra clear. Market still going right through here. And by the way, when I sell my clients, those are recommendations. I don't know if they buy them or sell them. I don't manage anyone's money, but I know what I put out, and I know what I put out every day, and that I can prove. Higher lows, higher highs. Well, to a degree, yeah. In the crude, it's fighting a battle here, but it still looks that way. The WTI, look at how the market's into the support. It's very difficult when you have this to try to be anything but friendly. Now, the question is, do you want to risk from 63.14 under this break low? Now you put monetary risk at work. I don't think you should. I think there's better setups that will come eventually. Get the market on your terms or don't trade it. Given there's 40 futures contracts that I look at, given that I look at any point in time 50 to 100 different stock ones, there's a lot to be done. Lower low, higher high. Would I tell you to buy over a upper Bollinger Band? Never's going to fall out of my mouth unless I'm on a drug or had too much to drink. I would be telling you, and this, you're not embedded. You're hitting it for the first time. That's where I think the pros are taking money off the table. In the nat gas, it's a churn. you're really not doing anything. You got momentum down, you have the bias down, void of a trend. You have a higher high and a lower low on the chart. So you put it together, you try to come up with game plans for yourself, and that's what these videos are about. These are the intro videos, and no more than that, to where my meat of what I do is in the morning subscriber videos and my written updates. You can find out by just going to iraepstein.com, the free offers. There's icons up here you can click as well. With that, I'm Ira Epstein. I hope you enjoy the other videos tonight, and if not, well, I hope you look for me first thing in the morning when we do the morning flash video. There's no major economic data due out tomorrow. Remember that. You have 5 Fed speakers on Monday. Yeah, 5 of them are hitting the path. We'll see what happens. Take care.